the board of directors of Pfizer, and I believe Matthew's fund has also invested in some similar deals in this space. So if I can say so, I would encourage you guys to connect perhaps offline separately.
Terrific. Thank you.
So now I'd like to move on to the next segment of our program, which is something that is actually a couple of years in the making, so to speak, and also the main theme presentation or talk of today, which is on cross-border next generation family office investing across Asia Pacific. And I have my great pleasure to welcome once again to the panel Matthew Lemire from US, representing perhaps more US perspective on family offices, Alan Duncan, co-founder and MD of Private Wealth Network, and Alfred Yu, founder of Ties Capital, joining me from literally 3 different continents. So welcome. I would like to ask each of you to give a quick, roughly 1-minute intro background about yourself. And if I can start with Alfred this time. I think you're on mute, Alfred. Yeah, we can hear you now.
Yeah. Okay. Yeah, I cannot see myself. Anyway, yeah.
We can see you.
Oh, okay, cool.
Yeah.
So I'm Alfred. I'm from China, and I run Ties Capital. We are a family office in kind of multi-family office in China, but we don't see family office anymore because, like, you know, in Chinese a lot of consulting, advisory, they call themselves family office. So that's the meanings now. Yeah. So we actually starting our company focusing on the alternative investment. So I will tell you more about our company later. Yeah.
Great. Thanks, Alfred. Maybe we'll go to Alan Duncan next.
Thanks very much, Victor. Just doing a sound check. You can hear me okay?
Yep.
Fantastic.
Can hear and see you.
Really appreciate the invitation, and great to hear the other presenters and our good friend Matthew Lemire to start with. So great to be on a panel with Alfred and with Matthew. So Private Wealth Network has been operating for about 10 years, and we have a group of 150 or 160 different family offices or ultra high net worth families based predominantly in Australia and New Zealand. A few increasingly who are based in Singapore and other parts of Asia who are joining us now. And our main focus is about making wealth meaningful for those families. We also have a real belief that private wealth is a major force for positive change in the world. So we spend a lot of time talking, of course, around all sorts of different assets, classes and investing, but also around philanthropy and around family governance and family strategy, family dynamics, and those sorts of things.
Great. Thanks, Alan. Matthew, for those of us that have just joined recently and didn't catch Matthew's earlier presentation and brief talk, please reintroduce yourself, Matthew, if you don't mind.
Yes, thanks, Victor. I'll be really quick. I'm one of the managing partners, general partners of Keiretsu Capital based in the US. And we are the fund arm of Keiretsu, which everyone knows is the world's largest angel group. I count myself, and I hope Alan agrees, a good friend of Alan's. I've been down to PWN any number of times, and we've welcomed his group to Silicon Valley a couple of times, and that was just incredibly fun. And I think I'm on this panel because I do meet with many of the family office networks across the US and Europe, and we do have our own fledgling family office investment network as well, which I talked about at the beginning. So thanks, Victor, for inviting me back.
Right. Okay. So if I can just kickstart with talking about some of the trends and getting your perspectives on some latest developments. Recently, I trust some of us may have attended the virtual events in Hong Kong around the Asia Finance Forum and Family Office Solutions Showcase, where a lady from KPMG gave a fascinating talk on family office trends. I think it's Irene Chu from KPMG. And she mentioned that 73% of families are already investing in some form of sustainable assets. 62% of families believe that impact investments are important for the legacy. 43% of sustainable investing is a top priority for business owning families. And 39% are intending to allocate most of their portfolios to sustainable sectors within 5 years, targeting exclusion-based strategies. So I believe, Alan, if I'm not mistaken, PWN took an annual survey recently. What were some of the findings with regards to the investment focus of family offices in general? And what could you talk to about sustainable sectors? And do the Asian family offices differ? And if so, how?
Yeah, thanks, Victor. There's a bunch of questions in there. Let me try and unpack that a little bit, and perhaps start with the Australia-New Zealand focus. That's predominantly where we're getting our data from at the moment. And perhaps before we go to the impact investing space, one of the key things that's come out, and this is data that's fresh, it's just from December, January, almost half of those who responded in our most recent survey, so half of the family offices and high net worth investors, or at least 46% of them, are changing their investment approach due to COVID. So that's a massive number. I think what that shows is that there are a number of them who feel that their previous strategy just didn't hold up under the stress of something like COVID, or they don't have the confidence yet to know that it's held up properly, and they're still trying to debate internally as to whether they have the right strategy or not. And when we dig into that a little bit more, what we see is that it kind of breaks down into two different categories. Some that are getting more aggressive, so some that are now have an increased appetite for risk, and the appetite for risk on average across the entire network is the highest that we have ever seen. And that's, again, a really interesting finding. Wow. If you think about the context of where we are, it gives you an indication of what some families are, looking to do with their strategy. And the other group is really very defensive. So an increased focus on due diligence. Some are just saying, look, I'm going to sit on cash and just wait because I feel like there's going to be a big correction in markets sometime soon. So we're seeing a really interesting time. People are revisiting their strategies. It's a real mixed bag in terms of what they're doing about it, but definitely a really fascinating time. In terms of the impact investing space, I would say our observation is, in terms of some of the findings that KPMG have come up with there, we would echo some of that. And our findings are just a little bit under 70% that families are already investing in some form of sustainable assets. Of course, that might mean that they only have 1% of their investments in that sort of asset class. So it's a reasonably low bar to jump in terms of giving a positive response. But I think what has happened is perhaps a few years ago, it was something else to add to the pool of investments. And now I think it's becoming an asset class where people are anticipating that they will get equally good, if not even better, financial returns than, let's say, non-impact investment asset class. So there's a few thoughts off the cuff. I'll probably leave the Asian perspective. I think that Alfred might have a better perspective than I in terms of what's happening up in parts of Asia.
Yeah, Alfred, good segue.
I think the findings really telling the trend. One thing interesting actually ties our company's slogan is use business to scale good, and our whole strategy is based on the social enterprise and impact investing. So I would definitely say it was a trend. When we started this strategy like 10 years ago, it was not that popular, but now I think everyone not everyone, a lot of second generation in China really focus on that. There's a two story I would like to share with you guys, which happened recently. I had a conversation with the family office of the Huawei, the second generation of the Huawei founders. We exchange our portfolios. It's very alike. Yeah, so they also invest in something we really on the social, sustainable, and the impact investing sector a lot. And also, I had a conversation with one of my friends. We're talking about developing a old land that he has. So what he told me is like, I think he doesn't really want to just making money. He just want to make money and have some meanings. So there's two trends. When those who set up a family office in the early years, they starting develop a comprehensive strategy on the impact investing and sustainable investing. But those who just come up with these ideas, they starting to have this idea. But definitely, this is a trend in China now, Asia, not only China.
Mm. And indeed, some of those Chinese wealthy are setting up family offices outside of China, right? In Hong Kong, Singapore, increasingly.
I think it is one of our
Australia.
Partners, yeah. One of our partners in New York City, she was running for the Rockefeller Foundation like 20 years ago. I think that's where the social enterprise idea really come up at that time. I then expressed in the family office circle. I think the Warren Buffett's grandson has a network there, Formula X, I think, and also Joey Rockefeller has literally an organization named Impact for this network. Yeah.
Very, very apt. So speaking of across Asian US family office ties, Matthew, could you give us your perspective on what we just discussed?
Yeah, thanks, Victor. I'd actually like to share something that I think connects together what you said, what Alan said, and what Alfred said. And I think it's to do with societal shifts. The millennial generation are beginning to enter their 40s. And so if you took a typical family, there might be a patriarch, or if it's a real multi-generational family, there might be that older generation. There's the mid-generation, the boomers, people like me or Alan, and then there's the millennials. Well, the millennials don't see the distinction between philanthropy and investment in the way that we do. You know, we think that there is a pool of resources called investments, and separately we have a philanthropic program, and it's typically some combination of health, education, inequality, sustainability, and diversity. But the millennials think that technology is the solution to the challenges in each of those areas. They think the climatic issue can only be solved by clean energy, by energy efficiency, by solar, by wind, and so on. They think that the world's health challenges can only be solved by virtual medicine, telemedicine, new technological breakthroughs around drugs and drug delivery, and so on and so on. And so what I think is partially reflected in both of your observations, Victor and Alan, is that as the millennials come through and they get into their 40s, they want a voice in their families. And they're saying, not only do we want to continue the philanthropic focus, but we want to convert it into an investment focus. And we want a little bit of money or a large amount of money to begin to place investments into emerging technologies that address the philanthropic mission of the family. And I think I'm seeing that here. I don't quite know if you're seeing it there. So I'm very interested to learn if that's something that you guys would agree with.
Yeah, so given that Alfred will be presenting some of his specific portfolio samples and deals a bit later on, I think without giving away too much of a spoiler, Alfred, could you talk to some of those items that Matthew just raised? It seems like what you guys do, or what Matthew is talking about, is basically the entirety of one's portfolio allocation into impact investing for social good.
Yeah. Well, there's a I totally agree with Alan with what you said, and actually, we don't. Well, philanthropy is a very important part, but I think what we really want to find a solution is a social enterprise, which is forming the business model where you can solve some philanthropical problems or the social problems. So the program itself can generate the cash flow, generate profit money to keep solving these problems. I will share some examples later on my presentation. I think a lot of them, actually majority of them, that are kind of social enterprise-based investments. I think that's something we really focus on. And also the needs, there's also two needs. For some families, you know, just to stay good quality of life doesn't really cost that much. So when you have a lot of money, it's just numbers. So what really what really you want and what really means to the world, maybe it's very important. And also in traditional Chinese the culture, the social status, maybe how the your investment, how the business you do can benefit others, sometimes maybe more important than merely earning profits. I think this idea doesn't really very popular on our parents' generation, but it's very popular on our generation, and even for the younger generation, millennials. Yeah, they are very popular now. And also another part is a lot of my friends, they have the certain needs to do, well, some of them, they want to do some cooler stuff than their parents. You know, a lot of them come from the very traditional manufacturing, traditional property developer, something like that. But some of them, they want to do some cooler stuff, and some of them, they want to you know, they want to prove themselves to the family, you know, so they don't want to do the traditional business or just taking over the business. They want to do something a little bit different, maybe more recognition. So that's also another two needs for why Asian families step into the social enterprise impact investment. Yeah.
I've got a few thoughts too, Victor, if you'd like me to share them.
Sure, please.
So overwhelmingly, I absolutely agree with what Matthew and Alfred have said. Perhaps just a couple of things additional to mention in what we see. So certainly it's a generational thing, but it's not just a generational thing. And there are some of those in older generations who are also very, very committed to impact investing and social outcomes in their portfolios. And that's important to note as well. It's not just the younger generation, although that is certainly the most noticeable group. In just referencing back to the survey that we've just completed, and when we asked the inheritors about, you know, if they were given the keys to the wealth right now, what would they want to do with it? About 25% of them say that they would actually just like to earn their own way, so to make their own way in the world. So that, I think, just reinforces some of what Alfred has been talking about. The biggest outcome is that they want to preserve wealth for future generations. So they don't want to be seen as the generation that isn't prosperous and doesn't do well. But using that for the wealth for social change and philanthropy is the second biggest finding. So that's certainly very high on the agenda for the overwhelming majority of that younger group. For us, that's under 35s, 35s and under.
I think, Alfred, you tick that box, right?
Yeah, I agree with that. It's not a generation thing, but but it's more popular for the young people here now.
Becoming more of a trend, though.
Also, I talked a lot of with my peers in the family office, especially the UK and the United States. I think at their generation, philanthropy is more like a tax thing, you know. Well, a lot of them doing the investment in foundations, especially those families, they just want to cut taxes. It's a very practical method for the family office. And then I think in the 90s, in the 2000 after 2000, so that there's more real needs for the setting up the foundations and the social enterprise now. But now it's totally a different sector. It's a very important part of it.
I've got a few questions from the audience and from previously. So in no particular order, Alan, could you give one or two examples on how Private Wealth Network has been able to help any Asian families to invest in Australia?
Yeah, sure. So I guess there's a couple of obvious ways that happens. So one is that Asian-based families want to relocate not just some of their assets, but some of their family to be based, whether that's, you know, starting with a university entrance or something like that. And often we see those people continuing to live in Australia and New Zealand after studies have finished. And alongside that, then the assets and those younger people are asked to steward those assets or grow those assets or invest capital locally. Or we see that there's sort of a satellite office of an Asian-based family office. So they have someone that works either full-time or part-time on their behalf to help them to purchase assets. So they're the two ways that we mostly see. And, you know, I guess we assist them just by getting them involved in our network, and they, you know, can tap into what the family offices on the ground are already doing, and the knowledge and different deals that people are talking about, etc.
Great. I've got another question. This is probably more aimed at Alfred and Matthew. In your experience and what you've observed, how do family office allocations compare with typical managed funds? So you know, the extent or the mix of direct investing versus managed funds investing. If you can talk to that, and does it differ much by geography?
So I can answer that a little bit. I was down with PWN last year. I'd hoped to be there this February. I mentioned that already, but and there was some fascinating surveys. It was really interesting because Alan had asked for the asset allocation and distribution of his membership, and I'm not sure I probably shouldn't share the specifics, but let me just say there was a lot less international than I would have expected. And there was a lot less technology than I would have expected. And I think most American family offices would have had a much more global allocation in their portfolio, and most of them would have also had more tech. On the specific issue of managed funds and how a fund compares to a family's direct investing, you know, I think you have to remember that family offices were always created by entrepreneurs, and that entrepreneur created great wealth around some business or some asset. And if they're still alive, they're probably going to have a disproportionate share of the wealth still in that business. And they may like to make direct investments into people that are like them, or that they see a glimmer of, you know, similarity with. And so a lot of first generation family offices are also very active direct investors, but typically in the space they know best. Then I think by the time you get down to at the other extreme are obviously professionally managed multifamily offices. And here, I'm sorry to say, they tend to be in the world of 60-40 put it into fixed income and public equities. And they actually argue the family out of doing what the family started with, which was take risk. And I personally feel that's a great shame. I think the family offices of the world have the resources to back the entrepreneurs of the world. And we'd love to see them do that. And some do, obviously a lot do. But part of my mission of getting to know Alan and in fact, Alan brought, when we first met, because he brought a delegation of 40 or 50, I think it was, families of his to Silicon Valley. And we attended the America's Cup, and it was a wonderful time. And I remember showing them then a page, and I said, how many of the top 5 companies in the world are technology companies? And everyone was shocked when it was 4 out of 5. Well, today it's 9 out of 10, and it's 17 out of 30 of the world's most valuable companies. So technology is the story of our time. I think families, the younger generation gets it. But I do think that unfortunately, many family offices don't have an optimum portfolio. They've been, I don't want to use the word suckered, but they've been encouraged to put all their money in low performing assets. And I think that's sort of unfortunate.
Alfred, your thoughts?
Yeah, I do agree with Matthew on that. It has similar situation in Asia, also in China and Hong Kong now. Speaking of the direct investing or funding the fund manager for that, I think it's very rely on what's the entrepreneur or the wealth creator style. For the first generation, they really like to do the direct investment. But if they are deciding, some of them, they won't decide to invest in the areas they don't familiar with. But if they decided to invest in the area they are not familiar with, they tend to hire the fund manager to taking of the fund. But for I think for the second generation, I think it also depends on what background they come from. If they come from the Wall Street, they come from the Silicon Valley, they tend to control the fund. But if they come from the traditional manufacturing or something else, they will like hire the fund manager. But it's very popular now here is for them to set up the fund of fund. They usually have a fund of fund. They very control this, and then they invest this fund of fund into different funds, and there will be some managers who run the different funds for that.
Yeah, I would say in my personal network here in Australia and parts of Asia, it's very much that trend as well, where a family office will set up their family fund of fund. And looking more and more to allocate to specialist fund managers, particularly if it's to do with technology, which I guess is music to Matthew's ears and a few others. And it's definitely the growing trend. And it's probably a heightened maturity of some of the investment styles of those Asian families. I have one last question before we, I think, out of time from the audience. This is from Grace Matthew. So what are the major impact investment themes that you are seeing families pursue, and to what extent are they willing to forego returns to achieve greater impact?
So I think I mentioned, maybe I said it too quickly. I think that the top 5 are always the same. And it doesn't mean that all families do all 5, but it's health, education, inequality, diversity, and sustainability. And when I say sustainability here, I'm talking about environmental sustainability. And I think those 5 things, I don't know any family offices that don't have at least 2 of those 5 in their philanthropic priorities. Now, there are others, so don't get me wrong, it's not just these things, but I think those are the priorities. So then if you map that to Keiretsu innovation companies, the companies that come and present here to Victor and the team, you're going to find a high degree of overlap. So we started today with a healthcare tech company that is making a big difference for prostate cancer. And I don't doubt that there's a lot of family offices that have health and cancer as one of their top priorities. So there's a match. Now, the fintech company would be a little bit harder to make the case, obviously, but it's not going to be 100% of Keiretsu companies aligned with the technology-enabled philanthropic purposes of family office. The point I'm making here, though, is if you're a family office and you hang out at Keiretsu, I'm absolutely confident you'll find a lot of great entrepreneurs and tech startups that you could actually invest out of your philanthropic pool of money, but you could treat them as an investment and treat them and invest in them out of your investment pool of money and still meet your philanthropic goals. And I think that's exciting. I think that's very exciting.
Yeah, whilst we wait for Alfred to come back and join us, Alan, could you comment on that question as well? Do you agree with Matthew?
Yeah, overwhelmingly, there are 5 massive areas, and they're definite. When we ask the question, we ask around philanthropically, what are the main focus areas, and they would correlate very strongly with what Matthew has indicated. I guess just that there are some others driven more domestically, perhaps by government regulation and things like that. So a couple that we're seeing here in Australia more locally that don't relate to tech primarily, although to somewhat relate to tech. So things like specialist disability housing. That's, I think we've heard of a number of family offices that are getting into that space, and that's driven a lot by recent government regulation that's made that more attractive. Other things that are just starting to find their way to Australia, this is certainly not mainstream sort of stuff, but things like litigation lending. And you could argue each way for, is it an impact investment or not? It really depends on what it is that's being litigated. But I think there are some families that are quite interested in that space because they feel like they can make social change through
class action,
the legal outcome. So they're just a couple of others to add, I suppose. And just looking at the question that's there, whether families are willing to forego returns to achieve greater impact. I don't know if there's any strong trend. I think as long as impact investing has been done, that there have been some who are willing to forego their financial returns. But I think increasingly the sense is that you don't need to do that you can get a really good financial return in many areas of impact investing.
In fact, I think one of the biggest movers and shakers on the US stock exchange this year or in the last 12 months is Tesla, right? Many people argue it's the biggest clean tech story of our lifetimes.
Yeah, yes, exactly. It depends on where you fit in the debate. Absolutely.
Yeah. So as conscious of time, we do have to move on. I just pinged Alfred. He said there was a internet crash where he is, so he's trying to join back in. But in the meantime, I will say thank you very much to my fellow panelists. It's great to have you share your insights with us today, and it's always insightful, and we do hope to be able to see you in this part of the world, Matthew, soon.
Yes, I hope to be there, both for Keiretsu and PWN. And I'm still hoping that the two of you are going to find a way to collaborate all the time. I think, both organizations are fantastic, and I love being around both.
Real pleasure.
I certainly hope so too. So on that note,